This video is sponsored by Bityard. With over 400 cryptocurrencies to choose from on their spot exchange, dozens of USDT pairs for futures trading, perpetual coin futures, trade commodities like gold, silver and oil, Forex, and major indices like Nasdaq. You can buy crypto from Bityard with over 50 different fiat currencies using Visa, MasterCard, Google or Apple Pay. If you like, you can use their copy trade facility, follow other traders who will execute trades on your behalf, or become a copy trader yourself. So if you want a bit of that, click the link in the description. Hello everybody, welcome back. We're going to have a quick look at Bitcoin. We're not going to beat around the bush. There's not a great deal to see. So we can see that Bitcoin, despite looking okay for a short period of time, and then effectively broke down for a short period of time, mostly to do with the way that traditional markets behaved, which was a bit of a down day that effectively got bought back up at the end of the day. Let's have a quick look at that. So this is your Nasdaq. You can see on a 4-hourly chart all the way down, and then at the end of the day, a little pump to effectively close more or less at break even, just 0.3% of the way down. S&P did exactly the same thing all the way down, and then by the end of the day broke even basically. So there was a big sell-off and it all got bought back up at the end of the day, and Bitcoin saw the same kind of move. Now we've been looking at this with horizontals. We can also view this in the form of a symmetrical triangle, which is a 50-50 formation. Which way is it going to go, up or down? Well, I'll tell you what, the closer it gets to the end of the formation, the less relevant the formation is, and more likely you get a counter move. So if we were to hang around in this through the weekend, let's just say break Sunday or maybe even Monday, whichever direction it chooses to go, whether it be down, it's probably going to be a fake out to the down and then get bought back up, have a significant bounce, same as if it were to meander and then break out towards here, and it'd probably be a fake out and back down again. Either way though, there is a bigger move on the cards, I would expect, just given the trajectory of traditional markets, the buybacks, the overall fear in the market as well. And if we do get broken down out of this range, which is the summer lows, where we did hold yesterday, we had that wick on that 4-hourly wick come down to test the summer lows, basically, with summer lows basically being the 28 to 29,000 kind of zone that we effectively double bottomed around here. We did come down to retest that and got pushed back up again. So I think that this weekend's likely to be a boring one. If we do break down, I'll be very surprised to see us break down lower than 26. And if we did get there, I would expect it to be front run and probably initiate a decent bounce from there. And that bounce probably takes us up to towards the top of this descending trend line that we see that we've been in for the last month. And that currently comes in at around 35. So I'll be looking for that kind of move, to be honest with you. After a breakdown, it'll be one worthy of a long position. Scaling into longs, not going all in on one long, and that's if I don't have two kids running around asking me to do finger painting with them or whatever it is. You know, it's not a situation to be trading within, I can tell you that much. That's one of the worst trading environments you can find yourself in, and it's not uncommon for me, I'm afraid. So yeah, long story short, we're still in this boring sideways formation with a view to break out one way or another. If the breakout takes place towards the end of this weekend or into next, I would expect a counter move to follow that, which would be the bigger one. And like I say, I've already explained that. Traditional markets, obviously everything hangs in the balance with those. The correlation between everything is obviously enormous, because it's not that they're heavily correlated amongst themselves specifically, it's just they share a common denominator, which is Federal Reserve monetary policy and all the nonsense that comes with that. So anyway, I'll leave it with you there. There's not a great deal to talk about. We've spoken about the long-term time frames this week. All those videos are there. We've spoken about the short-term. We've spoken about the upcoming alt season, which is obviously still it's a very realistic possibility. Remember, I'm not saying alt season is going to make people millionaires. I'm saying altcoins are getting to a place now where there's a very good chance that they will outperform Bitcoin to a decent extent for potentially maybe a week or two or even 3. Again, you need to watch those videos, so don't misinterpret what I'm saying. It sounds clickbaity. It's very appealing to see that, alt season around the corner. But it's all based on TA, and like I say, I made a further video all about the Bitcoin dominance chart to explain it to the skeptics, and I tried to make these videos reasonably short and informative, but it was all there, back tested, and what it means and why it's good, and what we should be looking for, and why I believe an alt season is coming around the corner. Again, we don't know the price of alts at the time. There's a very good chance that alts will go down in the 15-20% before we get that alt season. So recognise that. So don't just go, oh, he said alt season, buy today, because the alt season might only bring you back to square one. Think about what it is I'm saying. Look at the charts. Start a process. Build a strategy. And lo and behold, you can trade. Right, so I'll leave it with you there, guys. Thank you for watching. I hope you have a good weekend. Wish me luck with my finger painting. And yeah, take it easy.